Clay Patton on the Rural Radio Network. A shortened trading week with the observance of Good Friday, taking Friday out of the trade for those. But with it, we're talking with Darrell Holaday, Country Futures in Frankfort, Kansas. Darrell, a shortened trading week, but there was some fireworks still to be had, especially when you look at the livestock trade. Friday was just a wild day, but let's start with the grains. Looks like soybeans are still under pressure as South America, Brazil in particular, is pulling out that monster crop.
It is. Boy, that's the way you headline the soybean complex. We just, all year we've been using about 153. That's been the standard number coming out of there. I just think when you look at what they're doing with some of the signals indicate to me that crop's bigger. We've talked about that. It's got to. I know that when you go from 130 to 153, you would expect some logistic problems, some storage problems. These problems become much worse. I just think it tells you there's just a lot on the back end still flowing in, even though we're on the backside of this crop. And you also look at we were amazed when you saw Brazilian offers at the port $1.25 under the U.S. Gulf. Well, we ended the week at $1.75 under the U.S. Gulf. So this thing's gotten worse, and that pressured the soybean market. We know, we came off of the last Friday's stocks report, and everything had rallied, and we kind of had some strength early in the week, but we faded in all the markets. And as you said, the Brazilian situation is another one. We also saw a small factor in that the Argentine government came through with one of their premium peso programs again, where they were given a premium peso value to soybean producers who would sell their soybeans. In other words, they were given about a 90-point premium on the peso, which what a way to live. I look at that and go, my goodness sakes. So we're now Argentina sells soybeans when the producers are offered more pesos in terms of currency value. It's a mess. Reportedly, their true inflation is about 100%. We think we have bad inflation. This is just decade after decade of problem after problem. And anyway, but that kind of prompted some moving out of Argentina. Now, the interesting note is that we actually in the U.S. have started to see the soybeans. We have the soybean export program, because of those Brazilian offers, has really dried up to not much. But it should be noted that we did see some China business that has switched from Argentina to China, and people would wonder why in the world would anybody do that when Brazil's offering it $1.75 under the U.S. price. The reason is they're switching from Argentina because of the low-quality beans that are coming out of that harvest because of drought stress. But, once again, why not go to Brazil? The reason is because China's bought so many beans out of Brazil, they can't squeeze any more ships in there. And so Brazil's offers at these cheap levels are going further out, if you will, behind that Chinese business, if you will, and they're trying to so it's really logistics. So why not come to the U.S. where we can get some beans that we need to replace the Argentine? That's probably what makes up most of the move, is just a quality move. Now, also, as we went through the week, we're trying to monitor this weather. The hybrid winter wheat was supported most of the week. At times, ended up closing lower. Anticipation of some moisture returning late next week into the central and southern plains. Obviously, the area really needs it. The weather pattern change to me is we're going to see obviously much warmer temperatures, but I think it's going to be a juicier environment. Maybe it's some humidity, and that's what the models were kind of showing as we came to the week's end. We'll see whether it holds up with an increased moisture chances, really a little bit middle of next week or early next week, and then much better chance April 15th through the 19th. We'll see. We are going to see warm temperatures throughout the Midwest. The northern plains will melt the snow in the north. The Midwest will get going on planting and actually probably allow for a fairly aggressive corn and soybean planting pace early. And I do anticipate I do know that was somewhat of a pressuring influence. Also, Russia continues to sell wheat very cheap. They sold wheat to 600,000 tons to Egypt late this week, and that at a price of $272 a ton. That's well below U.S. prices, and once again is why we don't see much export business. Matter of fact, our new crop wheat sales actually declined this week, as we saw for new crop. You don't really see that normally this time of year, but given our conditions, especially in the hardwood winter wheat area, that's certainly a factor. The other thing is we're noting is how we just continue to see the soft red winter wheat price just fade versus the hard red winter. We've got a lot of acres in really good condition when you talk about soft red winter. Corn exports have been very strong. We had a good number coming off of last week's sales of 1.2 million tons. But we're seeing those slow as we saw the China business has kind of played out to this point. Now we're going to start to see that Brazilian corn crop start to be offered in that June-July period. My suggestion or suspicion is that if you've seen this bean crop go up, you're probably going to see this corn crop go up as far as size. Now there was talk in the market, instead of a 126 corn crop in Brazil, maybe 130, 131 is the number we ought to be using. But the rally this week early in the corn kind of shut off any exports. The reason we got exports going in the corn side, and China bought a lot of corn, is because we saw prices drop back to 610 to 6.25, 630 area, and that's where the interest is. You get up there at 650, 660, the export business just shuts off, and that's even going to be worse as you see a crop become available or being offered out of Brazil for the June-July delivery. May corn on the week, down 16 cents at 6.44. New crop December 5.57, down 9. May soybeans 14.92, down 13. New crop November 13.10, down 10 on the week. May Kansas City wheat down 14 at 8.64, down 14. New crop July 8.46, down 16. May crude oil 80.70 at 5.03. One of the disappointments I think you'd say in the corn market is that you saw this big run up in the energy sector, and we didn't see soybean oil or corn perform very well despite a $5 higher crude. And that, once again, occurred because the OPEC Plus decided to add another 1.1 million barrels a day cut in their production. Of course, there's a lot of political ramifications of this whole thing, but I think it's also an indication of what they see the overall world economy, which is certainly not positive in the commodity sector. On the cattle side, it was a wild week. We call it the Wild West. Big moves in Nebraska. You'd call it $2 to $5 higher. 177 in the western Nebraska, even some 178 and 280 in the meat. You're seeing, you saw 170, 172 in southern Kansas or in southwest Kansas, and even into Oklahoma. That market was solid, $2 to $4 higher. Packers scrambling to buy quality-fed cattle. We have begun the rationing process. That's what we have to do. I would remind people, again, that if you look at the overall numbers, overall production of the U.S. beef this year, we've been looking at about a 3-pound per capita consumption decrease. In other words, you can't consume what you don't produce. The numbers have not really been anything different than we expected. The issue has been we've seen tonnage drop as these steer weights continue to work lower, and they're down near the 5-year average. For the U.S., steer weights to be near the 5-year average is unfathomable given the fact that we just continually have seen weights grow for the last 20 years. This has occurred because of the weather conditions in the north and also the very high cost of gain. If you think about that, the weather conditions in the north are going to get better, but there's no incentive to feed cattle longer. There's no premium in the futures market, and at the same time, there is no sign the cost of gains going down anytime soon. So the producers have been very aggressive moving cattle, and I don't think you're going to see seasonally weights go down into early June and then start to increase. But I really don't see us increasing up near the last year's level. I think we'll hover near these 5-year averages for quite a while. The exact opposite is true in the hog business. Exactly what we're talking about the cattle, just go 180 degrees, and it's opposite. And that you had a big premium in those futures, anticipating lower numbers as we got into this, as we went into this first quarter and in the second quarter. And it's not there. We know it's not there, and so now you have to extract this premium out. But it's also caused producers who are losing money, $50 to $60 a head. We're seeing, according to Iowa State, the worst 6-month frost period of time in over 20 years as far as the farrow to finish in terms of economics, losing large sums of money. And so these producers are beginning to liquidate, pull gilts off of the breeding floor and into just taking them to the packer to cut down their feed costs, cut down overall costs, and move hogs. And when that happens, it makes the situation worse. So the product has struggled even more. We did see the lower pork product prices actually bump us up in exports, with China coming in the market last week and buying 20,000 tons, prompting a total week up to 53,000 tons. So that's what low prices do, and that will be a factor in the beef business as we move through in the next 4 to 5 months, as they'll see this competition. The problem is in the pork side is it's been very hard to get the wholesale retail margin to narrow up. We're not seeing the consumers see some of these lower costs. That will occur. Give it time, it will occur. But it hasn't really happened, especially with the belly at this point in time, or the bacon. On the week, April cattle at 170.107 up 272. June cattle up 98 at 163.10. April feeders, though, were down 20 cents on the week at $200.62, of course, way off the low. August feeder cattle 222.60 up 63. And April hogs, 74.15 down 110. The June hog contract down 345 at 88.17.
And that is Darrell Holaday, Country Futures, Frankfort, Kansas. Morning time at countryfutures.com. Do remember, trading futures and options involve risk of loss, may not be suitable for all investors. Do consider these risks before investing.